Where are we in the market now? What's lying ahead? This is the Sleuth Investor channel, but since we can't do any sleuthing, we can enjoy some speculation, trying to see what historical period most resemble today, so as to get a leg up on what's coming. So again, what period do you think today resembles the most? Most investors say they can't think of any comparison. There are simply no periods that compare. But in my view, that's not true. There are quite a few. Only most investors today can think of any for two main reasons. First, they only look at their own lifetimes or at most the 20th century. Second, they think the world is run by a bunch of civilian accountants with ledgers and laws and money supply instead of how it's really run, by a bunch of Don Corleones with ships and planes and submarines and tanks and maybe viruses too, as tools of policy. Just think of Putin. Do you think he only runs Russia with a money supply? So let me give you three comparable periods which will lead me to make some specific forecasts, a thing I rarely do. So I must warn you in advance. I can sound very convincing, but I can also be dead wrong. I've been before. So see all this merely as entertaining speculation in a time in which we can't sleuth because we can't leave the house. So with this in mind, let's start. The first analogy I'll bring in is 1789, the French Revolution. At that time, the disparity between the lower classes on one side and the aristocracy on the other was huge, just like today. So one day the lower classes said enough is enough, and like Bernie Brothers, they took up pitchforks and went after the rich. There was no virus then, but since all stopped working because of the revolution, there was no money. And the real money, gold at the time, disappeared, so the people began to clamor for more money to reactivate the economy. The People's Assembly was controlled by a Bernie Sanders type called Robespierre, and influenced by zany economists, the early MMT crowd. Parliament confiscated the church lands and printed paper money backed by them, called assignats, assignments, totaling about $850 billion in today's terms, just like what was issued in the crash of 0809, remember? But this money soon ran out, just like today, and the people clamored for more, again like today. So the government printed about $5 trillion more in today's terms, again just like the US is doing today, and when this money ran out, France was bankrupt. What could they do? It couldn't print any more money because no one would take it. Paper money was gone. Gold went to the moon. And they couldn't tax the rich because either the rich escaped or mostly were dead. So the obvious solution was to rob foreigners. Napoleon appeared, collected a huge army, and soon French soldiers were happily robbing and pillaging all over Europe, and pretty soon France was rich again. That's the first analogy. The comparison for today, pretty fanciful, but that's what it is. The US printed all the money it can. Soon it wouldn't be able to print anymore. Gold will likely go to half the moon, not the full moon. I'll tell you soon why. And the US will have to get money from foreigners. Yes, the reason will have to be invented, but it will be found. Who will these foreigners be? Of course, the richest, China. So the forecast here is gold will go to half the moon, and there will be a clash between the US and China, equivalent to Napoleon in Europe. Under this analogy, Trump is analogous to Napoleon, a war leader. Why a clash with China again? As the famed bank robber Willie Sutton once said, when asked why he robs banks, because that's where the money is. China is the only place rich enough to pay off the US debt of $5 or $10 trillion and rising. And remember, Trump already began to lay some tariffs on China, which began the clash. Second analogy. Britain, after the Napoleonic Wars of the 1800s, was again bankrupt. In fact, the bonds of the East India Company that had the royal charter allowing it to tax and rob India had a lower yield than the Britain's own bonds, called consols. Indeed, the East India Company was seen as a lower risk than Britain as a whole. So in 1813, 2 years before Waterloo, when Britain and allies beat Napoleon, Britain Parliament presciently stripped away much of the East India license from the East India Company, and soon Britain was robbing India directly with its own army, conquering Maharajas and Tipus, and paying its own general prize money, like today's hedge funder fee of 1+20. In fact, these prizes built many of Britain's fancy estates when the generals came back and built them, and also contributed great diamonds to the crown jewels. So here too we see an empire refusing to tighten its own belt, preferring to tighten the belt of foreigners. Remember Trump putting tariffs on China? That was a start. But before you say Napoleon in Europe and Britain in India were exceptions, let me tell you they were not. It has always been thus, for thousands of years. When Rome was bankrupt, it sent Julius Caesar to conquer and rob, pillage Gaul, that ancient France, and he did it, murdering half the people, and sent all the gold back home to Rome and became emperor. Another time Rome was near bankrupt, it sent Cato to Cyprus, who killed the Cyprus king, stripped Cyprus bare, sent the gold home, and Rome recovered. My tentative forecast based on this analogy, the only pocket big enough to pay off the US debt is China, or conversely, the only pocket big enough to pay off China's debt, now it can't sell stuff to the US, is the US. So a conflict between them to see who is left holding the bag is, in my opinion, inevitably. Also, don't forget, war is the ultimate reflator, an employer of last resort of idle young men, and today women too, who are unemployed and in the US also own guns and need a purpose in life. One note is relevant here. Empires do not always necessarily act from evil purposes. They simply act to benefit their members. Like blind moles in a tunnel, empires go blindly where is the food that they need. And the members tell themselves stories afterwards about why they acted. But at key points, the action is almost preordained for the benefit of the empire's members. Last analogy, 1937. In 1937, the market tanked minus 50% as an echo crash of the crash of 1929-1932, just as the market today is tanking as an echo crash of the 08-09 financial crisis. If I am correct in my analogy, and there's no certainty I am, the market still has 30% more to fall, bottoming the Dow at 15,000 and the S&P as 1,800. Then, as in 1938 to 1939, if I'm correct, it may rise for 6 to 12 months for about 50% and sail into 1939 equivalent, a big international conflict, World War II kind of war. In other words, if the 1937 equivalent is right, which is not yet sure, the US debt will be paid by foreigners forcibly. Remember, empires never pay their own debt. They make their opponents and enemies pay them, pay theirs. In the last count, credit ratings matter less than size and quantity of guns and members of soldiers and national reserve. Don Corleone doesn't go bankrupt. When he runs out of credit rating and owes too much money, and he has enough guns and soldiers, he will simply rob the Chinese laundry in the corner or the Arab run gas station. It's not a question of right and wrong, but right for whom and wrong for whom. So here's my speculation. Today, March 30, 2020, the market may rise here a bit because the market has been in the floor-wetting panic, and so much panic must be leached out to tease away the last reserves of cash from investors. The market always acts so as to cause the most damage to most investors. That's its job. But in a month or 2 or 3 or less, the market will tumble. If the 1937 analogy is correct, it will tumble 30% to get the full minus 50 as in 1937, and then similarly may rise about 40-50% and meander down initially for 1 or 2 years into the big international conflict. What about the bottom then? That's too far away. But what the heck? Let's speculate. The market bottom in World War II was in 1942, within a few days of the Battle of Midway, when the Japanese fleet was destroyed. The market somehow sniffed it and began to rise before anybody even knew it. It was before the conquest of Berlin, well before Hiroshima, but the market felt it and began to rise. If COVID-19 was Pearl Harbor, remember, we are wildly speculating here, then we are sailing into war or conflict, then there will be a midway moment a few years down the road when the war has been won. No one knows it yet, but the market will. That will be the time to buy. Too far ahead. What about gold? If the 1937 analogy is correct, which again is not yet sure, gold will rise for 2 years or so, but will not go the full moon because the authorities won't like it. Capital will be needed for the war effort, not for preserving the money's buying power of common folks. But again, that's too far ahead. At present, I'd avoid buying. Wait for that gut-wrenching, floor-wetting fear. When you yourself wet your own pants with fear, that's the time to start buying because everyone else is wetting theirs too and giving you their stocks for nothing. Not yet, not before. Once again, the above is nothing but fancy speculation by a sleuth who can't go out and do sleuthing, so he speculates instead. I may sound convincing, but I can be wrong. What's your view? Please comment below what you think of this and subscribe to the channel. And if you really like it, give my channel a like, tell your friends about it so they'd watch and subscribe too. Meantime, thank you for watching and see you in the next clip, which will be given as a public service comparing the Canadian and the US healthcare system from the point of view of a sleuth, me, who had talked to doctors and administrators to learn how the system really worked to be able to invest in the proper places in the future. See you then. Thank you.